It is extremely difficult to buy a low and sell a high, particularly if you're doing this on a monthly time frame. All right. So for instance, if you bought this monthly low, my goodness, right? Who is going to deal with 190 pips drawdown? Not worth it, right? Like even here, if you sold the high, eventually it goes, right? But are you going to sit there and sit through all that? It doesn't make sense.
All right, folks, here we are on Trading Up. We've got Andre Stewart back in the house to talk to us about the London fix again and show you how you can actually trade this. This guy's been on the show for many years and is a professional full-time trader, so you're learning from someone who's a master. Welcome back to the show, Andre.
Thank you. I'm not a master yet. I know some masters. I'm trying to get there.
Well, you're a master in my eyes. Let's dive into the chart and have a look at things.
Folks, if you want to trade big without risking your own money, check out Blue Guardian. You can get instant funding up to $400k, and they sponsor Chris Eubank Jr. and Birmingham City FC. Check them out at blueguardian.com or click the link in the description.
So a couple of things that I want to illustrate for you guys is, one, it's hard to buy low and sell high. In particular, buying the low and selling the high. Meaning this, we're looking at a daily chart, and depending on your account size and your risk model, you may not have to deal with 30 pip drawdown, right? Especially if you're a short-term trader, if you're a scalper, you can't do that. It's a bit too much. Even on breakouts, right? It's hard to say, okay, we closed higher, I'm going to buy. And if you just randomly buy and randomly sell because we did that, 50 pip drawdown. Another instance here. And this isn't bad. It's 21 pip drawdown. But the point I'm trying to say is, depending on your risk model and how you have things set up in your trade, in your particular trading plan, it is extremely difficult to buy a low and sell a high, particularly if you're doing this on a monthly time frame. All right. So for instance, if you bought this monthly low, my goodness, right? Who is going to deal with 190 pips drawdown? Not worth it, right? Like even here, if you sold the high, eventually it goes, right? But are you going to sit there and sit through all that? It doesn't make sense. And judging by the way it closed, we tested the low first and then we went high. So you need something a little bit more mechanical in order to, well, one, understand what the heck price is doing. Now, let me show you guys the fix. Sweet. Now, I'm going to show you London and Tokyo's fix levels. I'm also going to show you this red level. This red level it's a higher time frame fix that doesn't get discussed enough because I don't think many people understand it. I didn't understand it either. I figured it out. I asked a couple of people that I know on the inside, and they said, oh, yeah, that's blah, blah, blah. Okay, cool. I'm not psycho. I kind of am, but who cares? Now, one thing that you have to understand is when there's a void, an absence of liquidity, price tends to rip the other way. And give the credit of the liquidity voids to Chris Story because that's where it belongs. The whole gap and all that fair value guys and that blatant rip off of Chris. But the thing about the fix is they are limit order walls. And this is AUD USD. Blue line's Tokyo's fix. Purple line is London's fix. Now, geographically speaking, Tokyo's fix works better with AUD USD than London's fix because of the time of the day that Australia, I can't think of the name of the thing, the daily open, right? And no, it's not midnight. It is 2200 GMT. Like so much misinformation spread by dummies. Anyway, the social media trading influencers piss me off because they don't know what they're talking about. So one thing about the fix is they are limit order walls, and you can call that support resistance. That's another term that just doesn't work. But what they also do is they protect highs and they protect lows, meaning if there's a liquidity void that ripped up here, but you also sold some up here, where is the next level of dealing that a broker is going to give you? And not just a broker, a prime broker is going to give you a fix. That's why they're fixes. Now, the other thing with the fixes, they are levels that get front run, literally get front run. Because again, banks think risk first. They don't think, oh, I need to stop out a bunch of retail nonsense. No. Risk first. And you can look it up. The whole EC, what was it? I think it was Deutsche Bank that got sued. They were doing it at the fix. They weren't running stops. They were front running the fix. And it still happens to this day. But people are like, oh, they want retail blood. No, there's not enough money in retail. Now, you can see with the purple line being the London fix, when we break beneath it, we come back to it and then we break. Now, bigger swing trades come off of the red fix, typically speaking, because this is where a lot of the the longer term liquidity is. Now, remember, to get to a low, to get to a high, we must break the barrier. And the more times the levels hit, the weaker it becomes. Let me draw your attention to this Tokyo fix right here.
Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, and you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below.
Low right here. This is also a daily low. I've been staring at charts for a long time. I know this is a daily low. This low is protected because someone bought, right? And the bid ran out. It comes back for liquidity where the freaking fixes, right? Now, there's a little bit of liquidity here at this fix right here. But what happens? They get ran into a limit order wall. This is why all this order block nonsense is dumb, because there are prices that prevent price from running higher. And because of the limit order wall situation, like that's a real thing. And this is one of them, this red line. This blue line is a monthly key price point, which is not a fix. It's the longer blue line is not a fix. I should have changed the color, but I didn't. So deal with it, right? Now, there's no such thing as trade confirmation. It's all risk. It's low risk, high risk, whatever you choose to define it as. That is what it is. But if you're looking for quote unquote proof, like this is a hard trade to take. Let's be honest. Who's just going to blind fade a Tokyo fix? I suggest that you don't. But you see the direction of the red fix that's going lower. That indicates that the longer term flows are potentially short. But we don't short until we find a high, right? We don't long until we find a low. That is the cardinal rule of markets. So let's go back to this 1 hour chart. Now, you can see, this is why I'm using the live chart, because I'm not a hindsight guy. We're rejecting off of Tokyo's fix. I'm sorry, London's fix. Let's go to a 30-minute. And we're running down. We're running down to swing lows, and I don't even like that term. But if AUD USD is to go lower, you need a 4-hour breakout, a close beneath or above this fix, this Tokyo fix, to short it. Where is it going to likely run to? Price is very likely going to run to the next limit order wall, which is this Tokyo fix here. There's also some liquidity possibly sitting between the blue line, which is nothing more than a monthly key price, and the red fix. If these limit orders are indeed here and they are going to get absorbed, what's going to have to happen? The limit orders that appear at the London fix and the Tokyo fix are going to have to be strong enough to send price barreling into here. If price doesn't barrel into here, the balance between supply and demand is relatively the same. If it just barrels into the level, the supply demand level is supply, right? That's the stronger hand in the market. But you can see strategically, we have been selling at fixes. And I'm just extending this fix out right here. You have to transition out of this stupid retail, and I'm not calling anybody stupid, but the mindset of support resistance, the mindset of order blocks, the mindset of trend lines, the mindset that price moves diagonal is crazy, because price doesn't move diagonal. If you've ever seen an order ticket, it ticks up and down, and the fixes prove that. I'm going to show you one more thing, and then I'm going to get out of it. I'll show you two more things. You heard me talk about TCA. These levels are TCA prices, and don't ask me how to find them. I'm not going to tell you. I only tell trusted students what these are. These rotate. These are a rotating price period. So next month, the blue lines are going to change. Actually, the purple line is too, because the purple line is a quarterly. Let me make this black so you can see a little bit better. The purple line is going to alter too, simply because price changes per the time period, the prices that they deal at. Now, the purple line up there is a yearly transaction cost level. And typically speaking, limit orders sit here too. This is a major thing that gets done on the inside. This is one, I have 3 different ways to find transaction cost levels, because the market is multidisciplinary, right? If AUD USD, remember, there's a fix right here. Here's the other complication. If AUD USD can get beneath this blue line here, it should retest it and it should come back down to here. Remember, there was a red fix right here too, and a blue monthly key price as well. There is going to be a presence of buyers sitting here because what happens is, remember, trading strategies are trading psychologies, just kind of wrapped up into some sick, twisted method, right? So you're going to have the traders on the inside that are looking at the fix, looking at going long. You're going to have traders who are looking at the other key levels, the blue line, looking to long. You're going to have the transaction cost traders looking to go long there too. There's going to be heavy interest in going long. Will it work out? Don't know. They don't know. This is just one way to do TCA. I'm going to show you the final way, and I'm not going to tell you what it is. So I'm showing you this to show you need to think outside the box. I asked ChatGPT what TCA was. ChatGPT doesn't know. ChatGPT gets it wrong. Okay. This is another way to do TCA. These prices appear as soon as time frame changes. So I have prices that these red lines are weekly. I have prices for anything, bullish or bearish. Now, as prices closing above or beneath said levels, I know that the flows go a certain way, and I'm just trading level to level. Now, let's go back to here. Do you see the overlap between this whole area here? Let me box this out. This is a totally different method of TCA. This whole area, remember, there was a red fix, a monthly key price, and a Tokyo fix all right here. This red line is a weekly TCA price. This purple line is a quarterly TCA price. There is interest where this box is. This is the real market. So don't let the BS online and all that other stuff fool you. We know what we're talking about because blah, 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 order blocks, smart money, guys, it's all a facade.
Hey, if candlesticks still confuse you, they're costing you more than you think. My private mentor JJ's decoded 25,000 hours of trading into one better candlestick. Click the link in the description or visit tradingnut.com to watch the free video and grab the free guide.
There we have it, folks. What a breakdown. Andre, thanks again for coming on the show. What's the best way for folks to find out more about you?
You can hit the website, andrescharts.com, or the Instagram, which is just Andres Charts. I typically respond to every DM because people need help.
Well, what we'll do, folks, is hook a link up under this video. Go and check it out. Whilst you're down there, hit subscribe, like, and that notifications bell, and we'll see you in the next video.